All right, so I'm not going to delay any further since, we need to reward those who are on and not keep you waiting forever. Good morning once again, and thank you for joining the call. And I am recording, so, again, if you want to watch things over or if you know of someone who is unwell and needs to miss this class or something, you can always refer them to the YouTube channel where we're posting the calls so that everybody has access to them. Just a reminder here in the chat window that I have office hours today at 1 p.m. So basically soon after this class ends, it's the same meeting ID as before. You can come with your questions if you already started the homework for chapter 13, or if you have other questions about the class, just know that office hour is definitely happening. And then I also just wanted to share with you, I'm going to just share my screen. I already sent information about this, but just as a reminder, you may recall that we had discussed updating all the dates on our homework and tests and so on because of the fact that we basically lost a week during that recess to prepare for distance learning. And also just to give some breathing room because, everybody's kind of scrambling and just trying to keep it together. So obviously the chapter 12 work that was delayed by a week, that date passed last week. But just to, make sure that everybody's up to speed, the homework for chapter 13, which we'll get through a lot more of the chapter today and probably finish it by Wednesday. If we don't finish it today, it will be due next week, Monday. With some of the information that you have already, you're definitely able to start it, and you can probably do quite a bit more than just start it. So I would encourage you not to wait, until Sunday to start it. Try and do what you can now so that you can take advantage even of the office hours I have tomorrow at 1, and then obviously I have another class and office hours on Monday, April the 6th. So and in the meantime, as I said before, you can just also send screenshots of questions. Please know that just like I'm sure your your inbox, my email inbox is a wreck with the amount of emails I'm getting from work and from students. So if you do send me a screenshot and you find that within 24 hours I still haven't responded to you, please feel free to give me a nudge, because it's possible that your email may have gotten lost in the deluge of emails that I receive on a daily basis. And the dates flow from chapter 13 onwards. Just a reminder, I'm sure you know this already, but from the 8th of April until the 16th, we have spring break, which means that classes are not meeting. So I can't make things due in that gap. That's why there's such a big big amount of time between these two dates, because we'll have class on Monday next week, and then that's it until we meet again after spring break. So, I'm just trying to accommodate the fact that you guys should be off, and I don't want to make anything due during spring break, because given how difficult these times are, it might actually be a chance for you to just catch up on work, some of your other work, catch up on house duties or whatever the case may be. We will have a test on chapter 13 and 14 and a quiz. They'll both open on the same date. And I should have put the opening date. I'll put it up. But basically the quiz and the test open about 6 to 7 days before they're due. So I think from what I recall from my notes, and I'll make this update, I think they open on the 26th of April and they close on the 3rd of May. So you have about a week during which you can do the work. That doesn't mean you can start the test and take a week to finish it. What it does mean is that you will have time to study. But remember that once you start any quiz or any test, you have to finish it within the time allocated because it's all timed. Now, what I did do, and I explained that I was going to do this before, is that the quiz, and well, let's start with the test. The test is written by me to take you about 2 hours, but I normally give 3 hours because of just navigating within Wiley, and just people have multiple attempts, so they generally take more time. But now, because of the fact that the internet is being used basically by almost everybody in the country almost at the same time, I added another hour to the test time so that if your internet is slow or you're just feeling a little bit bogged down while you're doing the test, you will have 4 hours to do it. And then the quiz, I doubled the time. It's only 10 multiple choice questions, but I thought I'll just give you extra time in case the internet is slow. And so it's the same idea with quiz 2 and test 2 as well. You'll have about 6 to 7 days, a window in which to complete it. And then you might notice that our final exam due date also shifted by 2 days. If we were together in class, we would have taken it on the 8th of June. I just added time because we missed, that week of classes. And I figured that maybe people would still have questions for me on that Monday, the 8th of June. So then at least, since technically we don't have a class that day because the last day of classes is actually Thursday, the 4th of June, but I'm happy to jump onto a call that Monday, the 8th, in case people are still a little bit worried about some of the topics or something like that. So this update was made in Wiley. You'll see the dates, the date changes reflected. If something looks weird, just contact me because it's, it was a lot of changes I had to make. So I was trying to triple check that everything was correct, but it's, it's always possible that I might have made a mistake. And then I guess you might ask, well, where are the tests and where are the quizzes? Why aren't they already showing under your assignments? Remember, I only release the quiz and tests 6 to 7 days before they're due because I don't want people to accidentally start a test or a quiz or inadvertently start it, then I have to reset it, or people trying to attempt things before they're truly ready to start them or before we've gone over the material in the class, because that's going to be detrimental to you. I normally give a prep sheet before the quiz and test that tells you which exercises I'm testing, so you would want to wait for that and not just try and do the stuff on your own. Does anybody have questions about the timing of the assignments or anything that you saw in Wiley?
Nope, everything seems good for now.
Okay, anybody else? Anything that is a concern here with the dates or anything like that?
I just was curious about the grading. I'm just curious, like, what happens if you didn't do too good on the quiz and the test?
Yeah, I mean that's a great question. So my practice, I mean, if you just want to talk about grading in general, I'll just go here quickly. I know you guys already know that. I will just open up the syllabus so that you can be maybe reminded. Sorry, there's like a million things in my downloads for. So for the grading per the syllabus, chapter 12 is 5%. The 2 tests are 20%. The quizzes together count 5%. The final exam is 35%. The homework, other than chapter 12, they're 3% each. So it's 15% total. So what happens if you, let's say and I wrote you a test too, but I mean, this is a test for 13 and 14. I kind of treat the deliverable of chapter 12 like a test 1 type of scenario. But let's say you bomb out on one of these tests. My practice has always been that if you do better on the final, which is cumulative, anyway. So if you do better on the final than you did on the lowest test score, then I will drop the lowest test. So that's how it works. So let's just say something happens, and for the test on chapter 13 and 14, you really don't do your best. If you can pick it up in the final exam, then I'll just let the test go. For quizzes, you always should be attempting the quiz before you do the test, because the quiz is kind of helping you to check to see if you know what's going on. If your quiz grade is lower than your test grade for the same, material, I will drop the quiz because the test is covering the same material. So let's say on the quiz you get, 60%, but on the test you got 85% or you got 100%, and the quiz goes away. If your quiz grade is higher than the test, let's say you got 100 on the quiz and you got a 95 on the test, then I will keep the quiz. So basically, I will do whatever is most, I guess, could call it beneficial for the student. I will not drop more than one test. So if you bomb both of these tests and you do better in the final, I'll only drop one test, not both. And I also cannot drop the final. All right. So you don't want to fall apart on the final exam, because sorry, let me just put do not disturb here. Because that I won't be able to throw out, but I can certainly throw out the tests if they're lower than the final. Homework, it seems trivial for some, maybe 15%, whatever, but trust me, the 3% that you accumulate for every homework, in the end, it can make a big difference in terms of which letter grade, you're going to get. And I don't know if you guys are receiving these emails, and I kind of still have to wrap my head around it a little bit. Emails from CUNY that are talking about how you can actually still decide at the end of the semester whether you want the course, some of the courses that you're taking, to be for credit or no credit. So if the grades don't end up being what you want them to be, because of how strange everything is with the distance learning and so on, you can actually decide to not have a course count towards your GPA. So I'm not saying that that's necessarily the case that you wanted for this course. I'm just throwing it out there, as we try to work through, just all the variables here. That at the end, if things really went south for you because of all the demands of the semester, my understanding, and I'll find the email and send it out to you guys, is that you can choose credit or no credit, because I think the administration at uni understands that students are, a lot of students are struggling to cope this semester because of all the issue. I think it was Jeremy, you were asking me that, right? Help a little bit to clarify.
Yes.
What happens if something goes wrong on one of these. Okay. All right. Then the last thing from I think.
I have a question about the grading policy.
Yes. Yes.
Okay.
Debbie? Am I?
Yeah, this is Debbie speaking. Okay, for the grading policy, right? It seems to me that a majority of the grading comes from tests, correct? For the grading policy, for the quizzes, you said that we have like 3 attempts, right?
Mm-hmm. And it's four options. So 3 attempts. I mean, you're almost, it's funny because it's kind of like, okay, by the second attempt, now what the answer is. Mm-hmm.
Does attendance count in any part?
Yeah, so thank you for asking that, and let me just explain the attendance thing again. I'm taking attendance on the call, and that's kind of, if you're here, then I still have to, let me actually take a step feedback. For the purposes of CUNY or LaGuardia, by law, I still have to keep attendance in some way or another. So I'm taking attendance on the call, and if you're on the call, you're in attendance. For the people who are not on the call, they still have the opportunity to complete an assignment that was occurring around the date that the attendance, needed to be taken. So, for instance, I'm taking attendance today, and I'm also looking. Last week, I was also looking at whether people finished chapter 12, etc. The reason we also have to take attendance is we actually by not tomorrow, but the day after on Wednesday, I have to do what's called attendance verification on CUNY First because, people have financial aid, they have all kinds of things that require, and ASAP and College Now and what have you, that require me to keep track of their attendance. And also if someone has never attended the class, they actually get something called a WN, which means they never attended, which means it doesn't count against them. So unfortunately, I am compelled to take attendance, but the attendance is consisting of these two things, right? Assignments and or you're in the class in real time. Now, does the attendance count towards your grade? Absolutely not. I've stopped doing that maybe 2 or 3 semesters ago, in the sense that what I mean is before I used to do like a participation grade, part of it would be attendance, the other part would be homework or whatever. I stopped doing that because it's very difficult, especially in this climate. Definitely I wouldn't be doing it. It's difficult to gauge participation other than, there's a person in the room. So now everything has moved towards just doing the homework. Am I making sense?
Yeah. So what if for the let's say students who like join but not much, or they don't join, but let's say you complete all the assignments, the quizzes, the tests, like every
you're in attendance. You're in attendance. This semester, I'm not even mandated to do real-time online calls. The only reason I'm doing this is because I want to do it to connect with you guys, because I know the material is difficult.
Yeah, it is.
So I'm calling you to the call, understanding that you don't have to be on the call, but because I'm me and I'm a little bit invasive, I will still email people who are not on the call to find out, are they okay? Like, do they need help? Is something?
Yeah, because attendance does count too.
Well, it counts in the sense that I have to submit it. It doesn't count. If you never show up on the call and I contact you, you never respond, but I see that you're doing all the work and it's in on time, I have no choice but to count that in your favor. You know what I'm saying? I can't be like, oh, but you were never on a call, so I didn't hear from you, so now I'm going to ding you. I can't ding you because in this current situation, someone might be ill at home, or they might have a family member who's ill at home, so I have to accept that people sometimes won't make the call. It's just that if people are consistently absent, I do have, just like I would if we were in class, I do have a responsibility to check in with them to find out if they plan to continue with the course, because if they don't, then they have options for withdrawal and things of that nature.
Yeah. I mean, I was just wondering. That's why it was just a thought that came up in my mind.
No,
but I'm always on the call, right? And I always.
Yeah, but you're asking the right questions because you're asking a question.
Yeah, you just think of stuff sometimes.
Yeah,
it's fine. Credit to our final grade for doing both?
Sorry?
Can we get extra credit?
No, because that would be unfair. Like imagine Debbie can't make the call because someone is sick in her house. I can't give you I'm just making an example. I'm not trying to pick on you. I can't give you extra credit for making the call when somebody else could be incapacitated, and that's why they can't make the call.
That's not a good question, to be honest.
No, it's fine. I mean, I think it's reasonable to ask if there's a way to improve your grade, but not in that way, because it would be anything that's detrimental to some people. I wouldn't be able to do because of fairness, right? Yeah. So, but extra credit, depending on how the class goes, Jimmy, to your point, I do sometimes make extra credit available closer to the end of the semester. All right. So there is an opportunity possibly to do that, but I don't want to bring that up now because I find that sometimes people focus more on extra credit than the actual work that they're supposed to be doing. So I'll look at the end of the semester if that's something that we need.
Uh-huh.
Other
I find these meetings helpful, like I take notes and everything and I pay attention. Like I find it helpful, for homeworks and everything.
Yeah, I mean, having taught this class obviously many times, I can say that you're probably, for the most part, better off being here, but I also have to accept that some people will not be able to make it. So I can't compel anybody to be here, but I'm grateful for the people who are here. Is there anything else? Someone asked on the, and thank you for asking this. Someone asked on the chat, are we, for the quiz and test, are we studying the homework? Yes, you're studying from the homework examples, and obviously you're also reading the textbook, right? So my quiz and my test are not going to be dramatically different from what you were doing already. I don't see the point in that. The point of the test is for you to just show me what you know. So I'm not trying to trick you. If you study, if you do the homework, you figure out what your issues are, you try and study that along with studying the theory behind the work, you'll be fine. The quizzes, just to reiterate, are more going to be to do with calculations and journal entries and things like that. It's not going to be a whole lot of definitions. So please make sure that you're studying correctly, because for me, the purpose of the quiz is for you to see whether you actually understand the application of the work. So it's going to be 10 questions that are predominantly calculations and journal entries and things of that nature, not definitions. In the multiple choice that we have in the test, some of those questions might be a little bit of definitions, but not in the quiz. All right, so just be prepared for that. All right, so this was what I still just wanted to say. If anybody is still in need of a laptop or a tablet for whatever reason, please feel free to follow this announcement that I made on Friday. There's a short survey that you have to fill out, and then you would be contacted about where and when you can pick up the devices. They were still busy purchasing devices, I think sometime last week. So if you get yourself into this mix, I'm sure you'll get the appropriate information. So please be careful about trying to get a device if you need it. I just want to remind you that for timed tests on Wiley Plus, so not the homework, but the timed quizzes, the timed tests, you cannot complete them on a phone and you cannot complete them on a tablet. Like it can't be on a mobile device. It has to be on a laptop or a desktop. So I don't want someone to run into that issue, at the end of April and say that they didn't know. I'm saying this now because I had students in the past in my online classes having problems where they couldn't complete their timed work. Obviously, if your laptop bombs out suddenly and I need to give you an extension in time, I will, but please consider yourself warned that in order to complete your timed quiz and your timed test, you have to have a laptop or desktop available. And if you don't have that right now, please consider filling out the survey and trying to get onto the list of people who will be able to get a free device from CUNY. All right, so let's go back to where we left off last week. I mean, it feels like ages ago, so I'll just do a quick recap. We were accounting for issuing common stock when a company decides to sell stock to the public. They're trying to raise money for their operations, and whoever buys the stock will then have ownership, some form of ownership in the company. And we spoke about a few different companies that obviously have their stock trading on the stock exchange, New York Stock Exchange or the NASDAQ and so on. So we said that when a company decides to have what we call an initial public offering or IPO, they think about for how much should we sell the stock, what should the par value be, and what are the number of shares that we're going to sell. And so for par value, you're basically, we spoke about this, that it's basically a leftover kind of legal concept that was created some time ago where, you know, the lawyers said that a company has to keep at least some minimum amount of stock that it cannot distribute. But that concept has kind of fallen by the wayside over the years. So now it's possible for companies to have a stock with par value, but they may also have stock that has no par value, or they may have stock that has no par value but has a stated value, just to complicate things, right, a little bit more. So there's three scenarios. Your stock could have a par value, it could have no par value, and then it could have no par value, but there's a stated value. So we left off last time where we had finished example 4, right? And I'll just read it through and go over our answer. And then what I'll have you do is the part A of example 5, because I believe last time we ran out of time, so we couldn't do example 5. So for example 4, just to recap, on October the 12th, 2018, Wright Inc. issues 150,000, so there's the number of shares, $1 par value, so that's the value, right? The par value that we just discussed, shares of common stock at an issue price of $3.50. So there's the issue price. Prepare the journal entry required for the issue of the shares. So if we look at the theory, we know that when we issue the stock, we have to debit cash. Here's the rule, right? The issue price times the number of shares. We credit common stock for if there's a par value or a stated value times the number of shares, and then anything left over goes into an account called paid in capital, in excess of par value or in excess of stated value. So sorry, that's not the right thing. So last time we went through this for example 4, and I did put the stuff up on Blackboard, the solutions and so on. So example 4, we debit cash with 150,000 shares, which is the number of shares, times 350, which is the issue price, 525,000. Common stock, 150,000 times $1 par value, which is 150. And then this paid in capital in excess of par value for the common stock. We said that what we can do is we say we've got 525 on the debit side, we've got 150 on the credit side. So how much do we need to balance the journal entry? We're going to take the 525, subtract 150, and 375,000 is the answer. Another way to get to that answer is to say, we sold this stock for $3.50. The par is only $1, which means we got $2.50 extra on 150,000 shares. So $2.50 times 150,000, sorry, is also 375,000. So that's then, and that account is paid in capital in excess of par value. If you look in the book, they'll also, you know, try to differentiate because if a company has more than one class of stock, they will call it common stock. And then we were asked to do the T accounts, and we said, look, a T account is just copy paste. If you debited on the if you debit it in the journal, you debit in the T account, which is like the ledger. Sorry, my daughter's feeling very rambunctious this morning. Credit common stock 150, balance 150, and then this paid in capital in excess of par 375 credit. I'm going a little bit faster because I'm probably boring you already because we did this all last week. And then we said there's this concept of a 3-column ledger. It's 3 columns because instead of like our T account is just split into 2, this one has a debit side or a debit column, a credit column, and balance. So if we had to do common stock as a 3-column ledger, we would put the 150, the balance is 150. Then someone asked me what happens if we have another transaction, and I said pretend that we have another transaction for 200,000, then you add these two together to get to 350. You do not remove the previous balance because that was the balance on October the 12th. The balance on November the 1st is 350. Then if we pretended that there was suddenly a debit to this column or to this account, excuse me, because a debit is a subtraction, we go down to 300,000. So the balance on December the 2nd is 300,000. So that's the recap. Does anybody have any point of clarification that they need me to make on example 4 before we move into example 5? All right, doesn't sound like it. So you guys go ahead and do example 5 here, just part A for now. We'll get into stockholders equity section of the balance sheet. I'll maybe do it with you in part B. Just to read example 5, on December the 17th, there's the date Beltran Inc. issues 750,150 par value shares of common stock at an issue price of $4 each. So you're trying to follow the same rules to be able to record this journal entry. And if anybody's confused about where to find this, these questions, if you go onto Blackboard and you go to Zoom call materials, all the chapter 13 work is there. The exercises, the notes, the solutions, calculations from last week's call. So go ahead, I'll give you a few minutes, maybe 5 minutes, might be a bit too much, but 5 minutes to do this question based on what we discussed up to now. And I'll check the chat window while you do that. Okay, no one's looking for me. All right. If you've done the journal entry, you can make the T accounts for the 3 accounts that are affected. All right, so you've had 5 minutes. Can I have someone who hasn't spoken yet today, this morning, give us their version of the solution? The floor is open, but I want to hear from someone new.
December 17th.
Hang on, I'm waiting for someone who hasn't spoken yet. I know you want to bail us out, but we have to wait. I appreciate it. So I'm gonna start calling on people if I don't have a volunteer. Again, I'm just looking for someone who hasn't spoken yet today. All right, so I'm gonna go down the line. Kenya, I'm cold calling you. Are you there?
Can you hear me?
Yes.
Yes.
Would you like to help us with the solution? Yeah.
Yes. Let me try to see how can I put. I lost a big screen.
Yeah, you don't have to share your screen. You can just talk me through it.
Yeah. So basically, what I did is you put cash
Okay.
and you debit 3 million.
Okay. So debit cash 3 million. That's correct.
Yeah. And then you credit common stock.
Okay.
Which is 1,125,000.
Yes.
And then paid in capital, you credit paid in capital in excess of par value, which is 1,875,000.
And how did you get that number?
You get that number by subtracting the. So you subtract. Give me a second. You will subtract the par value from the issue price.
Yeah.
And then you multiply by the amount of stocks issued.
Right. So you can say, was the issue price 4? Am I right? I can't remember now. Yeah, 4 minus. 4, so you can say 4 minus 150 multiplied by how many shares was it?
750,000.
750,000 shares.
Yeah.
So you could do it. You could do it either way. You could say 3 million minus 1,125,000 is going to balance the journal entry will give you the 1875, or you could do $4 minus 150. That gives you the excess, right? Which is 250 times 750,000 is going to give you the same answer. 1,875,000. Yep. And I did not do the T accounts. Interesting. Don't know what happened there. So let me just, I mean, we're kind of beating a dead horse because I think everybody knows how to do the T accounts, but I'll just set them up here quickly so that we can. I'm gonna do this and this and this. Okay, so we have cash. Okay, so 3 million, right?
Mm-hmm.
And that's December 17. And you've got a balance of 3 million. So again, you know, for the people like, oh, I've seen this a million times, we really have to keep doing this. In some of the homework, you are asked to post, right, to the ledger and so on. Hopefully all this repetition is going to reinforce for you the work. The common stock is a credit. So please look now, you're splitting up the journal entry into its debit and credit parts. And the balance is 1,125,000. And then you have this paid in capital in, this is like the longest name ever. Okay, which then gives me no space for my debits and credits. I'll do it like that. And also a credit, right? Copy paste from the journal entry. Don't try to put a debit and a credit on your ledger. It can only be one or the other. So copy whatever was done in the journal, copy it to the ledger. So those are accounts, and these are the same, thank you, Kenya. And these are the same accounts that are gonna, balances that are going to go to the balance sheet, all right? So for a new part of the question now that we haven't dealt with before, and I'll come back to that solution, so don't worry if you were busy trying to write it down. It says, assuming that retained earnings is 750,000, prepare the stockholders' equity section of the balance sheet. So they're telling you that the earned capital, which is retained earnings, is 750,000, prepare stockholders' equity. So, sorry, I didn't mean to do that. So can you still see my screen? Because did I stop the share now?
Yeah, you stopped the share.
Sorry, guys. My bad. I don't know what I just, oh, you know, I know what I'm doing. Every time I click on trying to see the chat window, I'm actually stopping the share by accident because I saw someone send me a message. All right. Okay, so I'll answer that question in a minute. So let me just finish up with the balance sheet piece here, and then we'll go to no par stock issuances. So I'm in the textbook, or you know, in Wiley Plus, looking at the textbook, and this is what the balance sheet looks like that they present. Now remember, the balance sheet consists of assets first, then it's liabilities and stockholders' equity. In that section, you list all the liabilities first, but because we don't have to be concerned right now with assets or liabilities, we are focusing on understanding how to do the stockholders' equity section of the balance sheet. That's why this says partial, because we are only looking at stockholders' equity. All right, so when we think about creating a balance sheet, the balance sheet is going to be divided up into those two parts that we spoke about last week. We've got capital that is paid in from the outside, so that's people who actually buy stocks in the company. They have common or preferred stock, and they also maybe pay more for the issue price than the par value, so there's excess, right? There's in excess of par or in excess of stated value. So the main heading is stockholders' equity. A sub, excuse me, and this is going to drive you a little bit nuts. I totally understand. So, you know, I get it. All right. And it's in one of the homeworks. Like I said, for the test, I have to see what I gave you guys in terms of a balance sheet, or what I'm going to give you guys. But for now, just focus on this, because you do have to do one of these, the homeworks that asks you for balance sheet. So stockholders' equity is the main heading here. A subheading is paid in capital to tell you exactly how much of the stockholders' equity came from the outside. A further subheading is capital stock. And this is just talking about the piece of the stockholders' equity that is specifically in the account preferred stock, or in the account common stock. And I'll come to what all these other numbers mean. So then that gives you a total capital stock. Again, capital stock is just the balances that are actually in preferred stock and that are actually in the common stock accounts. Preferred stock is always listed first because it has preferential treatment, so it also gets listed first in the balance sheet. Now, what I will say is, yeah, you have a whole lot of features of the preferred stock and what is authorized and what is issued and outstanding. When you do your homework on Wiley, they don't leave room for all of this information. They basically just want you to put preferred stock. Sorry, I don't know what I just did. Preferred stock or common stock. All right. So I will explain to you what this means and all the other things because it's going to come up more in chapter 14 as well. But don't be surprised. Yeah. Did someone say something? No? Okay. But don't be surprised when you try to do the homework in Wiley, you'll see that they just leave room for you to put the name of the stock. So the 9% over here means that this preferred stock, each one of this preferred stock gets a 9% dividend. Can someone remind us what a dividend is?
Is it paid share?
It's what? Sorry, I didn't hear you.
Paid out, is it paid out interest shared to the?
Well, it's something that's paid out. Yes, it's basically a piece of the profit that gets paid out to the shareholders. So it's most of the time it's paid in cash, but it can also be paid in additional stocks. So yes, so a dividend is money basically that the stockholder is getting. So what this means over here is that these preferred stockholders, each one will get, right, every year, if you hold one share of preferred stock, you will get $100 times 9% in dividends, or at least that's what you should get. If the company doesn't have the cash to pay you, that's a different story. So each stock should be able to get $9, right? 9% of 100 is $9 of dividends. That's what that piece means. Obviously, it's $100 par value. You already know what par value means. The word cumulative, and yeah, I'm going a little bit further. It's kind of going to be more impactful in chapter 14, but since we're here, I'll just explain it. Cumulative sounds like you're accumulating something, meaning you're adding stuff up, right? So cumulative here means that if we didn't get our $9 this year, then next year in 2021, we have to get the $9 from 2020 and the $9 from 2021. So we don't lose the dividend from any particular year if it doesn't get paid out. It just keeps accumulating until we get it. That's what cumulative means. The opposite of that is going to be non-cumulative. All right, so cumulative just means that if I don't get paid today, tomorrow I got to get paid for today and tomorrow. All right. 10,000 shares authorized. That means that's the amount of shares that the company is allowed to sell. Remember, authorized from last week means what is actually allowed. And 6,000 shares issued means that out of the 10,000 they were allowed to sell, they've actually sold 6,000. So obviously 4,000 are still left that they could sell. Outstanding means that these shares are held outside of the company. It is possible, and we'll see it later on when we talk about treasury stock, it is possible for shares to also be held inside the company when a company buys their shares back. But for now, all the preferred stock that was sold is held by people outside of the company. Any questions on the preferred stock piece of the balance sheet?
Can you repeat what those outstanding means?
Yes, of course. So outstanding, think of outstanding like the word outside. So when they say that the shares are outstanding, it means that they are being held by investors or stockholders outside of the company.
Got it.
Okay, so everything that was sold is held by people outside. We'll see now when we look at the common stock that number isn't going to be the same. Any other questions on preferred before I go on to the common stock? All right. So common stock here, and we'll do some journal entries for no par common stock, so don't worry, it's coming. Here they're saying their common stock doesn't have a par value, but it does have a stated value. So again, like I said, I feel like it's unnecessarily complicated, but unfortunately, this is what we're dealing with. You have three scenarios. You could have stock with a par value, stock with no par value. That's the second scenario. Or the third scenario is you could have a stock with no par value, but the company decides to give it a stated value. And for our purposes, we treat the stated value the same as how we do the journal entry for par value. I repeat, for our purposes, the stated value is treated the same in terms of a journal entry, like a par value. So obviously you're going to say, well, why don't they just say par value? I know, it's as frustrating for me, but this is the way over time, the legalese, all the legal loopholes and stuff, this is where we've arrived at. So this company has a $5 stated value for their stocks. 500,000 shares are authorized. That means that that's what they are allowed to sell. But 400,000 shares were actually sold. So let me just show you something. I forgot to do this with the preferred stock. If you look at the 400,000 and you look at the $5 stated value, when you multiply these two numbers, the number of shares that were sold times the stated value, you get 2 million. All right, that's how that number is derived. Similarly, for the preferred stock, if you do the 6,000 shares that were issued, multiplied by $100, you get 600,000. Okay, again, these numbers are coming from the ledger, but you can also see how they are calculated if you look at the features of the stock. Now, they were authorized to sell 500,000. They only sold 400,000. But now look what's happening. And Kenya, this is to your point. Even though they sold 400,000, there's only 390,000 outstanding. What's missing? How many shares are missing?
10,000.
10,000 shares are missing. Does that mean someone ran off with them?
I think that was the initial they started off with. They had 10,000 and 6,000 was also, it's actually 4, maybe?
No. I mean, I know what you're saying, but no, it's not even as complicated as that.
The people outside the company has it.
Yeah, exactly. If the shares are not outside, then they must be inside. All right. So the 10,000 that appear to be missing are actually shares that the company is holding in the form of treasury stock. Treasury stock means that the shares are being held inside by the company because they bought them back from investors. You'll see a lot if you're following the news now with all the airlines that are on the brink of bankruptcy with all the flight cancellations and everything to do with COVID-19, that many people are angry because the reason the airlines are so close to bankruptcy is that they used all their free cash to buy back shares from the public. And some of the reasons that companies do that is because they're trying to push up the share price, because the more demand there is for something, the higher the price goes. They also just didn't know basically what to do with their money, so they just decided to pump it into shares, because a lot of the executives, their bonuses and things are tied to how well the company's stock price is doing. So if you are buying shares and the price goes up, then obviously that means that your pay will also go up. Sorry to say it, but that's what people are capable of. So the treasury stock is what the company is holding inside. So 400,000 shares issued, 390 are outside with other people, and 10,000 is inside with the company. Questions on the common stock piece?
What happened? It just popped in my head. I'm not sure if I'm right or wrong. What happened to the, because they've authorized 500,000 and they
Where's
only,
the other 100,000? Is that what you're asking me?
yes.
Yeah, it's just unissued, but they don't have to disclose that on the balance sheet because I guess, because you can do the math, it's not necessary to say that 100,000 is unissued. It's basically just sitting waiting to be sold. So let's say the company at some future point feels that they need an additional injection of cash, then they can sell the other 100,000 shares.
Oh, okay. So basically just work with the numbers given. Don't add numbers. Okay.
Yeah, you don't have to. You don't have to because, again, for the purposes of this illustration and in general, you should be able to calculate what's unissued, and what's unissued shouldn't even come into play, because it's just not even around. So yes, work with the numbers you're given. So in the end, then we've got total capital stock of 2.6 million. Guys, I know this is complicated, so if your eyes are glazing over or if you possibly even fell asleep at some point, please don't worry. It's a lot to take in, but I need to go through this and we'll practice, and then you also have a responsibility to read and practice on your own, okay? Because it's a lot of information coming at you very quickly. So I have my responsibility to teach you, obviously, but remember that after this, if you're still confused, you can either come on the office hours, or you can go back and read this on your own and try and see if there's anything that's still bugging you. So in the end, this 2 million and the 600,000 gives you 2.6 million, which is the total capital stock. And remember again, capital stock is the balances in the preferred stock and the common stock account. If a company doesn't have preferred stock, then it's just common stock. All right. Now, the next piece is additional paid in capital. So this is over and above the numbers in preferred and common. This is the account that we were just busy with over here. Where's my solution? Remember, we had paid in capital in excess of par value. That's additional, right? That's additional paid in capital. So in excess of par for preferred stock was 30,000, and in excess of the stated value, why stated value? Because that's what they're using for common stock, was 1,050,000. Those two numbers together give you total additional paid in capital of 1,080,000. Plus the 2.6 million of capital stock gives you 3,680,000. So at this point, you've dealt with all the paid in capital, that is the money that was paid in from outside. And then the last piece is just the retained earnings, which is the earnings that comes from basically the net income that is held back in the company. So the paid in capital plus the retained earnings together gives you total paid in capital and retained earnings of 4,730,000. You don't have to, I'm not going to go too much into what other comprehensive income is. It's just, you just add this number to the total paid in capital and retained earnings. But the bigger thing that I want to focus on is treasury stock. Any money that's held inside the company, in this case, treasury stock, it's a subtraction, okay? So the 80,000 is subtracted from stockholders' equity. So you should be asking why? Well, stockholders' equity represents what is held by by people outside of the company. So anything that is kept inside the company has to be deducted from this number. So that's why treasury stock is 80,000 subtracted from the balance. So heads are spinning. Does anybody have a point of clarification here?
I do.
Yeah.
I went brain dead. I'm sorry.
Yeah. That's what I'm saying. It's totally.
From there down,
From where? From where?
From 30,000 down. So I don't know. I'm not sure how they got 30,000.
No, you can't calculate 30,000. So thank you for asking that. You can't calculate 30,000. Well, you wouldn't know how to get to this number without knowing the issue price. Remember when we did this question over here, we didn't know what paid in capital in excess of par was going to be without knowing how much cash was received, right? Similarly, over here, you don't know how much cash they got for issuing the stock, so you will never be able to calculate these numbers without having done the transaction yourself.
Got it. That's the
Yes.
same for the Treasury, right? Because I don't know how they got 80,000.
You won't be able to know. I mean, I know because I teach the class, I know that if it's 10,000 shares and this is 80,000, then they bought these shares at $8 a share, right? And we're still going to discuss treasury stock. But you, at this point, you should not know that. All you should know is that 100 times 6,000 is 600,000. That 5 times 400,000 is 2 million. And that's it. Everything else, the only other thing that you're responsible for is adding and subtracting. That's it.
Professor, can you explain example 5? Because I honestly just got lost with the solution.
Can I explain what?
The example 5 that we just did.
So which part did you get lost at?
Okay, so I know how you got the 125, which was
1125, yeah.
yes,
150.
125, sorry.
Got you.
But where I'm stuck is, how did you end up having the 3 million?
Oh, because if you look at the question, do you see that it says that they issue the stock at $4 each?
Yes.
So if you look at our rules, cash is the issue price, which is $4 times the number of shares, 750. So that comes to 3 million.
Oh.
You can see it over here,
Okay,
4 times 750.
Okay, got it. Thank you.
All right. What else, people? Now is the time.
Excuse me, Professor.
Go ahead.
Can you repeat why the treasury stock is subtraction?
Yes. So do you understand that stockholders' equity, right, is showing what the owners of the company own, right? When we mean owners, we're talking about people outside of the company. Do you agree?
Yes.
So stockholders, investors, and so on. So it's like if I was invested in Facebook, I'm not part of the company, but I'm an owner. The treasury stock, by definition, is stock that the company owns because they bought it back from their stockholders. So because this is something that the company owns, but stockholders' equity is supposed to show what is held outside of the company, we have to subtract the treasury stock from our balance.
Okay.
Are you sure? Don't just say okay. Yeah. So let me also go to common stock and just repeat my point just to, kill everybody further. Sorry. But 400,000 shares were issued times $5. So we show 2 million here. Right? You see that? But that 2 million isn't actually accurate because only 390,000 is outside of the company. So 2 million is here, but the 10,000 shares have to be subtracted because they're inside the company. That's another way of thinking about it. All right. So you basically overstated how much common stock is held by stockholders over here because you took the whole 400,000 times 5. So at the bottom, you're going to have to subtract the 10,000 shares because you already told the people that only 390,000 is outside the company.
Oh, okay, I got it. So okay.
Yeah, say?
Yeah. The first you say, because it's already times 5 times 40,000.
400,000. Yeah.
400 get 2 million. So at the final, you need to less
the 10,000.
Yeah, the 10,000.
Yeah, you got to less the 10,000 because you counted 10,000 too many shares over here. Mm-hmm. So you got to subtract the 10,000 at the bottom.
Oh, okay, I get it.
All right, great stuff. More questions, folks? All right. So this is hard, okay? The balance sheet stuff is hard in the sense that there's a lot of names and sub-names and things to remember. So we'll practice a little bit. I'm going to I'm going to do the balance sheet for part B of example 5 with you. Just it's a very small one, but just to give us a little bit of practice. Yeah. Let me see. Maybe it's better if I go over here because this sheet is a little bit bigger. All right. Let's make this 125. So if you're confused about what we're doing right now, remember we finished part A of example 5. So I'm going to go into part B now to create the balance sheet with you. And we're basically assuming 750,000 for retained earnings and preparing the stockholders equity section of the balance sheet. After that, we'll get into no par value common stock and issuing common stock for non-cash and all that stuff. All right. So let's just do the balance sheet. So when you start a financial statement, sorry, so this is going to be Beltran Inc. Let me just put the example 5 part B. So you put the name of the company, the name of the statement, and we're also just saying that it's partial. This piece, when you're in Wiley, this piece is already done for you, right? Now, because they're asking for stockholders equity, you start right at the beginning. I know there's one question near the end of the homework where they ask you to only do the paid in capital section of the balance sheet. So your naming has to start at paid in capital. I know it's annoying, but unfortunately that's the nature of the computer program. So Beltran Inc. balance sheet stockholders equity.
Oh, it's the month. You have to put the date.
Oh, sorry, my bad. Thank you. What was the date again? December. No, hang on. Let me just go back because now I'm just going to say anything. Okay, so let's just put that it's on this very day. Thank you. December 17. Let me fix the formatting. Yeah. Okay, I'll try again. December 17, 2018. Thanks, Jimmy. So point in time, right? December 17, 2018, stockholders equity. What's next? Based on our studying of the balance sheet over here, what do we put next? Paid in? Capital, right? Paid in capital. So that's telling us about the capital that came, oopsie, that capital that came from the outside in. Then if we go back here, we say capital stock, right? To account for, in this case, the common stock. There's no preferred stock in this example. So again, unfortunately, there's a lot of headings and subheadings. Finally, we get to common stock, and you don't have to put all the features because again, in Wiley, it's not asking you for all the features like, you know, what's the par value and issued and outstanding. For the most part, it's just asking for the name. So I'm going to keep it simple, especially since this is the first balance sheet we're doing together. So what's the balance that's going to be in common stock?
1,125,000.
Yeah, so we're taking exactly from the ledger, right? And I'm putting the $sign because it's the first number in the list of numbers. So going back over here, right, you've got common stock, and so then we're up to the total, right? Total capital stock. So, you know, it's a little bit silly here because we only have one number, but I'm just going to do the total capital stock, right, of 1,125,000, just to give you the full answer. Questions up to here, folks? Okay, so if we continue, the next heading is additional paid in capital, then we do all those in excess of par things. So additional paid in capital. So now people are already panicking, right? Because they're like, oh my word, if I do have to do this in a test, how am I going to remember this and whatever? Let's just real talk, that obviously you're doing the test at home. The test is basically to some extent open book in that, if you have certain things that you need to remember, you can have a piece of paper next to you. If we were in class, I would have given you a template, all right? I would have given you a template where all the names are already written and you would just have to calculate the numbers. If you were working in the real world, you would have a balance sheet from the previous year to refer back to. So don't feel bad if you are busy doing the homework, or if you have a question in a quiz or a test. If you feel like the balance sheet is something that you are really going to battle with, then just keep a reference of something like this near to you, so that excuse me, so that you can actually refer to it while you do the question. It's not cheating, because remember I told you that if we were in class, I would have given you the template, because my aim is not for people to be memorizing headings and subheadings. My aim is for you to understand how to build a balance sheet in general, okay? And I find that sometimes people focus too much on the names, and then they don't actually know how to do the balance sheet itself. So we have additional paid in capital in excess of par, common stock. Going back to the question, it should be 1,875,000. So we go back here, 1,875, 1, 2, 3. Notice that there's no debits and credits in the financial statements, right? You're just listing the balances. And so if we go back to our reference sheet, that's it, right? So that's going to be our total. Sorry, I'm on the wrong sheet. Total additional paid in capital. If we had more than one class of stock, the totals would be more meaningful. At the moment, they're just, one number, which seems a little bit dumb, but we'll just deal with it. Now we've got total paid in capital, and that is going to be the sum of the common stock and the additional paid in capital. That's 3 million. And we can put like some type of line here, so we know we're totaling something. And then the last thing you have to do is include the earned capital, which is the retained earnings. If you go back to the question, it said that retained earnings was 750,000. So 750,000 for retained earnings. There's nothing else. There's no treasury stock or anything. So you can actually just say total stockholders equity. You don't have to say total retained earnings and paid in capital and then say stockholders equity again. So this is going to be 3 million plus 750,000. You should have a $sign on that. Questions, folks?
Can we still have the template so we can print out?
This is I would say use this as a template. Do you know what I'm saying? This is, if I had to give you a template, I would just be giving you something that looks like this, but would be formatted for the specific question that I was asking you in a test. Do you follow?
Yes.
So you can use, what illustration is this? Let me see, why is this thing not marked up? I guess this is 13.11. I think is a good reference, because it basically incorporates almost everything that you could run into. So I would just print this sheet, or if you don't have a printer, then just take a picture of it on some other device that you're not using. Remember, if you're in a timed test and you try to go into another instance of Wiley while you're in a timed test, it's going to kick you out of the test, okay? So anything that you want to refer to, like this, for instance, if you want a template, you probably want to make sure you have that handy before you even start any type of test or anything, all right? Jimmy, that was you asking, are you good?
Yes, thank you.
Okay, and it's somebody else asking me something. Did I miss a question? Did I miss a question?
Can you please go to the solution and zoom out a little bit?
Yes,
I
of
just
course.
missed something in the beginning of the exercise.
Just 1 second. Ah, oh man, I don't know. Today I'm off my game and I keep stopping the share. Monday blues. All right. Where was I? I can't get the window. Oh, there. If I move it to the bottom. So zoom out or zoom in. You want the whole
Zoom out.
solution? Oh, zoom out.
Yeah.
So make it
all,
even.
all solution B, yes. So
You
we
want
can
the
see
whole thing to
what's
be
going
on one
Yes.
in one. Got you. Okay, there you go.
Please. Perfect. Thank you.
More questions on the stock or on anything really before we move on?
Can you repeat that one more time about how did you get 750,000?
Oh, it was given in the question. So if you look at example 5, I'll come right back to the solution, Kenya. But if you look at example 5, look here, assuming that retained earnings is 750.
Oh, I got you.
Yeah, so it wasn't calculated at all.
Thank you.
No problem. Other questions, people? All right, so everyone had a chance to copy this down, correct?
Yes.
You can just click on yes on your thing if you want to, or just say no if you didn't. That's probably the easier way to go. Okay, so let us actually just maybe stretch legs and have people just get their bearings. We'll go into issuing no par value common stock for cash, and then issuing common stock for services and no non-cash assets, excuse me. But I think we're due a break here, so why don't we reconvene at noon? I'm just gonna take a quick 3-minute break here, but then I'll come back on in case somebody wants to ask me something. Okay? We'll be right back at noon. I'm back if anybody is not on break and wants to ask me something.
Professor, I had a question on while the class for chapter 13, question number 1.
Hang on. Let me go to the assignment so I can answer you properly. Okay, just 1 second. For which one?
Question number one, it was just transferring net income to retained earnings, but net income doesn't come up as an account. And if you just
Yeah, but you should. But net income shouldn't come up because remember that the journal entries debit income summary credit retained earnings.
Oh,
There's
okay.
no such account as net income. Net income is just the ending balance on the income statement.
I was just going crazy pressing net income. I'm like, what is it about?
No, remember we did this. I'm sure if I show you, you'll remember from last week. The first two things that we did there: debit income summary, credit retained earnings. That's the transfer journal entry transferring net income to retained earnings. All right.
Yeah, I see.
Okie dokie.
Thank you. No
problem.
thank you.
All right, so it's 12, so we can get going again. Let's tackle issuing no par value common stock. So remember, and at the risk of being very repetitive, I'll just say there are three scenarios. You can have par value common stock, which we just had. There's no par value common stock, and there's also no par value common stock with a stated value. So in this section, excuse me, we will do the no par value common stock and the no par value common with a stated value. So starting with example 6, I'll do this one with you, and then I'll leave you to at least do one on your own to make sure that you understand what's happening. On July the 20th, 2018, Reyes Inc. issues 1 million. So there's the number of shares, no par value shares. So we know that's the situation of common stock at an issue price of $5 each. Prepare the journal entry required for the issue of the shares. So I'll go over here and just do the answer, and then we'll talk about how this works. Okay, so obviously it's a journal entry, so I need a debit and a credit. This is example 6, part A. So we know that cash is going to be the issue price, which in this case is $5, times the number of shares. What did we say? 5 times a million, right? So 5 million. So 1 million shares. So that's easy enough. That's going to be 5 million. And that goes in line with what we said previously when we look at the literature. I'll come right back to the answer, so don't worry. I just want to show you again, where do I get this information? If we talk about issuing stock, debit cash with the issue price times the number of shares. Credit common stock with the par value or the stated value times the number of shares. So here's the problem. We don't have a par value, right? We don't have a par value. So how are we going to credit common stock? We do need to credit common stock, but what ends up happening where there's no par value, the same amount that goes into cash is the same amount that goes into common stock, and we don't have any paid in capital in excess of par or paid in capital in excess of stated value because there is no par value and there's no stated value. So cash is 5 million and common stock is 5 million. And that's the end of that for no par value shares. Questions there?
Only no par, right?
Yeah, for only no par, because, because there's no par value, you cannot differentiate between what goes to the common stock account in terms of par value versus what is additional paid in capital. So this applies only when there is no par value. And I'll do my triple exclamation point because that's, it's good to emphasize that we don't want to start doing this now for anything, right? This is only for no par value. If there's a par value or if there's a stated value, you have to follow the approach from before that we were doing in the previous example. So this was part A. Any other questions, people? We're good. Okay. So in B, they say again, assuming that retained earnings is 660,000, prepare the stockholders' equity section of the balance sheet. So just to give us a little bit more practice, right? Let's just do this one instance of the balance sheet again, just for the practice. But remember, this will be slightly, I guess, easier because we don't have any additional paid in capital. So the company is going to be Reyes Inc. I'm building a balance sheet, right? This is going to be the balance sheet, and it's a partial balance sheet.
July 20th, 2018.
Thank you. What was it? July the 20th. Thank you. 2018. And what am I missing? That's it, right? So those are the name of the company, the name of the sheet, the date, and now we're going to go into stockholders' equity, right?
paid in capital and
Yep.
capital stock.
Paid in capital. I'm not going to do all the indenting now. I think everybody gets it. So capital stock is the next heading.
This will be
Now we will put common stock. We don't have preferred stock, so we just go straight to common stock. And you take this number, 5 million, straight from the, in this case, the journal entry, because we didn't do a ledger. So it's 5 million. There's no additional paid in capital, so this is basically it, right? So this is going to be your total paid in capital is just going to be 5. I'll just type it out, otherwise it's going to bring the dollar sign down. Total paid in capital. Nothing else. Your next piece is retained earnings. In the question, it told you to assume that retained earnings was 660,000. So that's what you'll do. That's your retained earnings. And since there's nothing else like treasury stock or whatever, you can just call this total stockholders equity. If there had been treasury stock and other things, you would have to say total paid in capital plus retained earnings, and then only total stockholders equity. But this is what we have. So it's 5,660,000. Questions on the balance sheet?
Yes, sometimes the bottom one, the last one, the total, they put it in like different answers. Like there's also an answer that could be total paid capital and retained earnings.
Yeah, so I'll show you now from the book, and this is what I was referring to, but maybe it's easier to see it instead of speaking about it in the abstract. Over here, do you see there's this heading, total paid in capital and retained earnings, right? And then you have total stockholders equity after the other comprehensive income and the treasury stock. Because we don't have these items right now, I just went straight to stockholders equity because I was asked to do the stockholders equity section of the balance sheet.
Yeah, I did that for the homework. That one I got wrong because it's only the
Because
partial
they
part.
were looking for, yeah, they were only looking for the paid in capital section or something like that. So you probably had to end on total paid in capital, not on total stockholders equity. The language, excuse me, the language sometimes gets a little bit funky. Let me just show it. This is of use to everybody since you're all busy with the homework. I think it's this one. I could be wrong. Let me check. Yeah, no, it's not that one that we were talking about. Was it this one?
Yeah, I believe it's the last one all the way in the
Yeah.
bottom.
Do you see it says prepare the paid in capital section as opposed to prepare stockholders equity? So because of that, you end on total paid in capital and not on total stockholders equity. A few people have emailed me about this thing, so I'm just pointing it out. Compare that to the previous question that says prepare the stockholders equity section. So you start with stockholders equity and you end on total stockholders equity.
Oh, so I gotta pay close attention what they're asking for. That's what's
Yeah,
happening.
unfortunately, you know, if again, this is the nature of the computer, right? If it was in a class and you kind of you didn't pay attention and you did the whole stockholders equity section, I would just mark the pieces that were relevant, right? But because this is a computer, you have to read carefully, like how should you round to 2 decimals? You have to read whether there should be a minus sign in front of a number, you know, all those things. You have to read which section of the stockholders equity they're looking for because it's programmed to receive only certain things, you know. So yeah, pay close attention to what is actually being asked. And I think with the second last question and the last one, it's easy to get confused because exercise 1311 is asking you for the whole thing. And then the last question, problem 13.1a, is asking you only for paid in capital. All right, so why don't you guys try to do example 7 here? Just quickly, I'm gonna give you like between 3 and 5 minutes. It's basically the same idea. you're issuing 150,000 no par value shares of common stock at an issue price of 350. In fact, it's so easy that I'm just going to give you 3 minutes to do it. All right, so we've had 3 minutes. So example 8, just going to go down the line here. Okay, let me see if I can make this a little bit bigger. So example 8, let me just fix this answer because they didn't get one excess. You should have had cash of 525,000. That's $3.50 times 150,000 shares. The common stock takes. Oh, I'm looking at the wrong example. Sorry, no one's saying anything. I'm already one ahead of you. Sorry. Example 7. You're debiting cash for 350 times 150,000, and you're crediting common stock for the same. My apologies. I was planning to do example 8 with you, and I jumped ahead of myself. Does anybody have a problem with this answer? We're kind of on the same wavelength here.
Good.
One person. Anybody else have questions?
Nope.
It's
No, we're
simple,
fine.
right? So 525 debit cash, 525 credit common stock. Sorry for the confusion at the top there. I was already on to the next question. So let me do example 8 with you. It's a little bit I mean, it's not that hard, but it's just terminology. So on October the 12th, 2018, Wright Inc. issues 150,000. So there's the number of shares, no par shares of common stock, but they have a stated value of $1 each. So like I said before, a stated value you can treat like a par value. It's just the name, the terminology that is different. So instead of saying in excess of par value, you just say in excess of stated value. And the issue price is $3.50. We know the 350 is going to impact cash. The 150,000 is the number of shares, and then we have a stated value of $1 each. They're asking us to prepare the journal entry required for the issuance of the shares. So I'll just go to a clean sheet here. Let me see. So, does this make sense? Yeah. All right. So debit and credit. Let me make this a little bit smaller. All right, so we're doing cash, and the cash is going to be $3. Was it 350? I'm blanking out here. Yeah, 350 times 150,000 shares, right? As the rules dictate from before. 350 times 150,000 shares, 525,000. Then you're going to do common stock, but the common stock, you will say the stated value, right? $1 times 150,000. So it's 150,000, but I'm just showing you where that's coming from. And then you've got this long name, right, from the textbook, paid in capital in excess of stated value. Try to make this so you can still see it, and then it's common stock. So you'll see sometimes on my answers, and if you've looked at the answer already for the solutions for classwork for chapter 13, I just put additional paid in capital because a lot of companies actually don't use this long name, this paid in capital in excess of stated value. In fact, if you had, I'll come back to the solution in a second. I just want to show you, if you had to look at Amazon, for instance, they don't do that long name. They just say additional paid in capital. So in practice, companies are less likely to use this long name, but the way the textbook is written, they're still using that. So I have to show you that because that's what the answers on the homework are also looking for. So debit cash with 350 times 150,000 shares, credit common stock with $1 times 150,000 shares, and then paid in capital in excess. I just plugged the number, right? 525 minus 150 is 375, but obviously you could also say 350 minus $1 times 150,000 shares. It's still going to come out to the same number. Notice this, right? That's the only difference between if this had to be par value, it would have just said in excess of par value because it's stated value, it's saying in excess of stated value. That's the only difference in the treatment between a common stock that has a par value or common stock that has no par value but a stated value is basically this word stated as opposed to par. Questions?
So the only difference is the name.
Literally just the name, because if you had to scroll up to anything that we did with sorry, if I just go back here, do you see here, like this question is basically the same question. The only difference is this word, par versus stated. So example 4 and example 8, it's basically the same numbers, except that the company's stock is stated value instead of par value.
What about if it's non-par value? Is it the same, just the name?
If it's no par value without the
Then
stated value, then everything goes into common stock. You can't have paid in capital.
Right.
Mm-hmm. Then it will
And those are the only 3 options we have?
Yeah,
right?
Then it would be like this example. Remember where we just dump everything into common stock?
Got it.
Yeah, so your
Okay.
your 3 options: par value, no par value, no par value with a stated value. And no par value with a stated value is basically the same treatment as par value, except that the name over here just says stated instead of par.
Miss, did you do example 7?
Yeah, I did.
Can I just see it real
It
quick?
was so easy that it went so quickly. Debit cash, 5
Okay,
cents.
I'm just gonna take a picture of it, you know, to not like hold up the time.
No worries. Okay.
Let me just take a picture. Okay, done.
Okay. Yeah. So now we're on 8. So questions here, folks? Any other questions? And I'm saying this with a stated business because these are the types of things that can get you stuck even in Wiley, you know, where you might be typing par the whole time, but you're supposed to be typing stated. I mean, besides the fact that it should be accurate, your answer should be accurate, but I mean, these are the time suck issues sometimes with the computer program because it's looking for this word. So please be careful to read the question and see, right, that it's a stated value. I'm not going to repeat the stockholders equity section because it's basically the same as what we've had before when we had paid in capital in excess of par. It will just say paid in capital in excess of stated value. So if you really want to know what that looks like, I'll show you from the textbook. This example had a stated value, common stock, right? Paid in capital in excess of stated. It's literally just the word that changes. So far we've done issuing stock at par value, no par value, no par value with a stated value. The next thing that we have to talk about is how do we account for a company issuing stock for services or for non-cash assets. So this means that maybe a company is just starting and they use a lawyer, for instance, and instead of paying the lawyer in cash, they give the lawyer some of their shares. Maybe they don't have cash, or maybe, you know, it's some agreement that they reached. Another option could be that a company wants to buy a building or a piece of land, and in order to pay for it, they issue stock to the seller instead of paying them in cash. All right. So when you go to the notes, you can see over here, I'm in this piece, issuing common stock for services. So someone provides a service like an accountant or a lawyer, and you give them stock, or you issue for, like I said, a land or buildings or a vehicle or something like that. So the problem becomes, because you're not actually exchanging cash, the problem becomes what amount should you record the transaction at, right? So if, let's say, you and a friend both need something from each other, one person has, you know, an oldish phone that they want to get rid of. The other person has, let's say, a pair of sneakers that they want to get rid of. Both of you need these items. You swap them. It's almost like what we would call barter. You swap them. Now the question is, what is that transaction really valued at? If you had to make a journal entry, would it be at the value of the phone? Would it be at the value of the sneakers? Or would it be some other number? So for a company, the question is the same. When we do this, do we record the transaction at the amount that the stock is trading at or worth? Is it the amount of the services, or is it the amount of the non-cash asset? So just to read here quickly, a company may issue stock in exchange for services like a legal fee or non-cash asset. What amount should it be recorded at? Here's the rule. The amount of that the transaction should be recorded at is either the fair market value of what is given up, so that would be the stock, right? So what is given up is the stock, or the fair market value of what is received, that would be the service or the non-cash asset. And here's the rule: whichever one can be determined more clearly. All right, so you can't just say it has to be at the fair market value of the stock. If your stock is not trading on a stock exchange, then it's very difficult to figure out what the fair market value of the stock is. So you may have to go with the value of the service or the asset, right? If your stock is traded on the stock exchange, it might be easier to do it that way than to try and get someone to do a valuation of, you know, a building. So if I said I'm gonna trade 2 of my Facebook shares, sorry, I didn't mean to call 2 Facebook, 2 of my Facebook shares for let's say for your phone. It's easy to see that if I trade 2 Facebook shares, it's going to be like $325 or $326, right, worth of shares that I'm giving up. So it might be easier to just go with the price of the Facebook stock instead of trying to figure out, maybe you've been using your phone for 2 years already. I don't know, you know, exactly what that phone is worth, but I do know exactly what the stock is worth. So again, the rule is you go for the fair market value. Fair market value means whatever something could be sold for at a point in time. Fair market value of the stock or the fair market value of the service or the non-cash asset. So if you said, okay, I'll swap my phone with you for shares in a company that is not publicly traded, we'd probably be better off trying to figure out the value of the phone instead of trying to value a whole company just to figure out what that stock is worth. Questions on the theory over here before we do some examples?
Yes. So just like, let's just assume that the phone is like $20, right?
Yeah.
Well, you bought it for 200, and now the market value is $20. So when
Yeah.
you're putting it in the balance sheet, you would only use the market value, right? You wouldn't put the 200 that you bought it for.
Okay, great question. So yes, you would go for 20 because the balance sheet is going to be based on the actual transaction. So on the day when you do the transaction, the cost and the fair market value are going to be treated as the same. So since the fair market value is 20, that is also now going to be historical cost for the purposes of the balance sheet, not 200. You're right.
Got it. Thank you, Professor.
Mm-hmm. So unfortunately, you can't, you know, be like aspirational and say, but oh, I bought this phone, you know, for $500 2 years ago, so I should still get $500. I mean, it doesn't work that way. There's depreciation.
Yeah, I get that. Yeah, I get that point, but it was just like I was kind of confused because when you were putting it in like in accounting ways, does it go exactly like it goes in real life?
Yeah, so exactly. So our books require us to record the transaction at some amount, and it's going to be the fair market value today. And today, the expectation is that the fair market value is going to be the cost to us. So you're completely right. It's going to be $20. All right.
Got it. Thanks.
Okie dokes. All right. So any other questions on this non-cash asset business before we do an example? Okay, so we'll do some examples, but when we do the example, I want you to keep in your mind that the rule is that we record the transaction at the fair market value of what is given up or what is received, but it's going to be whichever can be determined more clearly. So if someone gives you a bill, you use an account and then they give you a bill and the bill says, you know, these services cost you 200, and you want to give them stock, but your stock doesn't have a fair market value, you're better off going with the bill that you received from them because that's more easily determined, right? So, you know, just bear that in mind as we read these examples. So I'm looking at example 9 in section D. So on March the 15th, Jordan Corporation issues 4,000 shares. So this is the number of shares that they're selling of common stock to attorneys. So they used some lawyers, and instead of paying the lawyers in cash, right, they are issuing stock, and it's in settlement of their bill of 20,000. So the shares have a par value of $1 each. Notice how we have some of the features that we had before with stock issuance. We have the number of shares, we have a par value, but we don't have cash involved here, right? There's no receiving cash. What you're doing is you're paying in stock to settle an expense. At the time of the exchange, there is no established market price for the stock. So that means that there's no fair value for the stock. So in the absence of a fair value for the stock, we have to use the attorney bill as the fair value amount, right, in order to record this transaction. So then it says to prepare the journal entry for the issuance of the shares.
Operation expense and then common stock.
You can do operation. You can also just do attorney fees to keep it simple. So I'm going to go over it now. And I mean, I think sometimes if the company was just starting, they would sometimes call this organizational expenses. But I'm just going to stick with attorney fees for now, just to, to not drive us all crazy. So the attorney fee is an expense. So, expenses increase on the debit side. So we're going to record the expense on the debit side at 20,000. Again, if you look in the book, depending on whether the company just started, sometimes this is called organizational expenses. You could also call it operational expenses. The question sometimes hints for you as to what you should be calling it, but for now you can call it attorney fees. So this is the thing where you don't receive cash, right? So normally we would put cash over here, but now we're receiving something other than cash, a service. And to your point, Jimmy, now we go with common stock. The rules don't change with common stock. You're still going to say par value times the number of shares. So if we go back to the question, the par value is $1, the shares are 4,000. So you're going to say $1 times 4,000 shares, which is obviously 4,000. So we don't balance, right? We still need, 16,000. In this case, because there isn't an issue price, you're basically just going to plug this number, right? There isn't really an issue. I mean, you can work out an issue price. Obviously, it's going to be $5 because it's 4,000 shares, but you're fine to just plug this number so that the journal entry can balance, and this is going to be paid in capital in excess, right, of par value for your common stock. And that's how you record the transaction when there is an issuance of stock for a service and the stock price is not easily determined. So we use the value of the service as the amount to record the transaction at. Questions there? Everybody's okay? Apparently, or some people are leaving. All right. So why don't you guys, since it seems like everybody's supposedly okay with this, why don't you guys try example 10? See if you get it, all right? Example 10. I'll give you 5 minutes for example 10.
Yeah, Professor, I was gonna tell you that I got it before. That was like, that message was sent like way before.
Sorry, I think I was muted when I was saying this. If you contact me on chat and I'm unresponsive, just talk to me in the call because sometimes I can't keep up with the chat messages and I'd like to be responsive. So I really don't mind if you interrupt me.
Professor, the whole session I'm being kicked out of the
Hang on, your voice is going in and out. Can you repeat what you were just saying?
the whole time and then kicked out of the meeting the whole session today. I don't know what's going on.
Okay. It might be even now when you're talking, your voice is distorted. It might be an internet connection issue on your part. I have a very, very stable connection here. And I know for the other days when you were in, your connection was stable as well. So I don't think that it's Zoom. Can you check the speed of your, like speedtest.net or something to see if there's something up with your internet connection?
Let me try.
Mm-hmm. Sorry about that, but it's, yeah, I don't know if maybe if it's a Wi-Fi issue.
You guys can keep going. Thank you.
Yeah, no, people are doing example 10, so there's still like 2 minutes to go. So don't worry, you check your speed and let me know if you figure out anything else.
Can I give the answers? I want to see if I did it
No,
right.
2 more minutes.
Okay.
Patience, grasshopper.
Professor, can you please go to the answer of example 9 again? I just missed something.
Yeah.
Thank you. Can you please go up and to the right?
Up and to,
yes, there you go. That's it. Thank you.
Can you see it even though some of it is cut off, right?
Yeah, but I think that I can
I'll make it
see
smaller so you can see the whole thing.
Yes. Perfect. Thank you.
Daya, is this still you going in and out?
Yeah, it's very bad. The internet is like 2 Mbps.
Yeah, that's 2 megabits per second. That's pretty slow. Pretty slow. Do you have like any Ethernet connections in your house, like where you can actually physically connect an Ethernet cable to your computer?
Yeah, I'll try to call Spectrum after this class.
Yeah, because I think if you can get an Ethernet cable that you actually plug into your modem and then plug the other side of that into your laptop, you might need a dongle. I don't know what kind of laptop you have, like some type of adapter to receive the Ethernet, but that's going to give you a more stable connection because obviously with Wi-Fi, the what do you call it? The signal is sometimes not as strong as if you had a physical line connected. So
You had
call
to
them
reboot
and,
your router. You left it on too long.
well, that's possible, but it can also just be that, I mean, that is a possibility, but it can also just be that her signal for the Wi-Fi is problematic right now because of the service provider. So going straight into the modem through an Ethernet cable might help you there. and also
Okay,
ask like
I've
what
had
Jimmy's saying, ask them about whether if you reboot the router, maybe that can also help the situation for sure.
I'll try to upgrade and pay some more, like in monthly basis. Maybe I don't have.
Yeah, but I mean, make sure that you negotiate properly with them, because a lot of these places are actually trying to remove data caps and doing all kinds of stuff to help people because of the situation. So first ask them if they can help you to just increase your speed before offering to pay them anything.
Thank you so much.
All right. Sorry about that. I hope that you can get this resolved. Nevertheless, I mean, it's obviously extra work now for you, but I am recording. So for the pieces where you got kicked out, they will be available later after Zoom renders the video. All right. So, so go ahead. I think, Jimmy, weren't you asking me if you wanted to give this answer quickly?
Yes, if I get it wrong, I'm sorry. Basically, my journal entry was land.
Hang on, let me type as you go so that we can see what we're saying here. Okay, so just wait for me. I only have 4 minutes, so I gotta move. Chop chop. Okay, talk to me.
Yes, the first one was land. So debited for 50,000.
Yeah, so debit land. So again, yeah, you've got the land is instead of receiving cash, you are receiving land, and you took the 50,000 of the land. Why did you take the 50,000 land and not something to do with the stock price?
Because that was the cash value. That's the asset.
That, and it says that the stock is not actively traded, so using the fair value of the stock is not an option, right? Just like, yeah, there's no market price
It's kind
for
of
the
a
stock.
replacement.
Sorry, what? Did I hear
It's
something?
kind of like a replacement.
Yeah. So, and because the stock isn't actively traded, Jimmy, you're right. You basically have no choice but to use the value of the land, right? Continue.
And then it'll be next one is common stock for 5,000. That's
And how do you get that?
1,000 stocks times by 5.
$5 par value, right? Times 1,000 shares. So that's going to be 5,000. That's correct. And what's happening after that?
And the easy way is just minus to balance, just minus whatever the credit to the debit is, and that should remain for the paid in capital.
Capital in excess of par value. You plug this number, right? Because that's really what you're left with. 45,000, plug the number. Simple as that. Questions? Yeah, anybody?
No questions, I got it. Thank you.
Okay, so let me run through this last one. I'll do it at breakneck speed, but I want to show you how it's different from the other two, okay? Example 11, Athletic Research Inc. is an existing publicly held corporation. This means that the stock is trading on a stock exchange, which therefore means that there would be a stock price available. All right, that would be easily determined. You could probably just do a Google search to find the price. Its $5 par value stock is, there you go, actively traded at $8 per share. The company issues 10,000 shares of stock to acquire what? Land, right? Recently advertised for sale at 90,000. Prepare the journal entry for the issuance of the shares. If something is advertised for 90,000, does that mean that that is what it's actually worth?
No, it's not. So it's 80,000.
So why is 90,000 not what it's worth? Because people are going to try and get a price as high as possible that isn't necessarily the fair value, right? If you wanted to buy an apartment, you look at what the apartment is being advertised for, you know that there's still room for negotiation. So look how it's different from this. This says land worth 50,000. This says land advertised for 90,000. So this isn't a reliable number. I can make up a flyer and advertise land for any amount that I want to, whether that's actually what it's worth or not. So to your point, you were just saying we got to go with the stock price because it's actively traded at $8 per share, and the company issues 10,000 shares. So the way this example is going to be a little bit different, right? And let me make this smaller so you guys can see the full thing. So example 11, you are going to take the land, but you're not going to take 90,000. You're going to say $8 per share times 10,000 shares. That is what we are saying the land is worth, because we are using the stock price as the fair value for the transaction. This is a little bit confusing because you're saying, well, how can you use the price of the shares to be what the land is worth? Remember, we are swapping, right? We're swapping stock for land. So we're saying we can't figure out how much the land is worth, but the stock is worth 80,000. So it must then mean that the land is also worth 80,000 because this person is willing to take 10,000 shares at $8 a share in order to sell the land. And so then you're going to take common stock. The rule still stands that that is going to be par value times the number of shares, not the trading price, par value. So it's going to be $5 times 10,000 shares, which is 50. And I'm aware that I'm a minute over, so bear with me, 50,000. And then to balance the journal entry, you have 30,000 left over, and that's going to be this long-winded name, right? Paid in capital in excess of par value for your common stock. So this last example was different from the other two because here we actually used the actively traded fair market value of the stock to substitute in for the price that the land had been advertised at. Questions there?
Nope, that's it. Thank you so much, Professor.
Professor, that was an accident actually, because I was putting my notebook on
That's
my
fine.
keyboard, right?
I know what happened. Don't worry, I know what happened.
Yeah, I was like pressing buttons, and when I went back, I didn't see that it was sent. You know?
Yeah, no worries. Don't worry about it. These things happen. Anybody else with any point of clarification here, or are we solid?
As of now, we're good.
As of now.
Yeah, we're good.
I love the caveat. Next time, we're going to talk about treasury stock, which is kind of, not that easy. So please come ready for that. And then we're also going to just finish up on preferred stock issuance, which is similar to common stock issuance, and then preferred stock dividend, which takes us into chapter 14. All right. So that's the coming, I guess, the coming attractions. So that's all I have for today. Remember, if you do want to come to the office hours, it's at 1 p.m. The meeting ID, as I've said before, but I'll just copy and paste it again for everyone in the chat window, is 463-614-368. Otherwise, go and have a lovely day.
Thank you, Professor Yuta.
Okay.
And also, does anyone want to exchange brain for 14?
Attendance?
What did you say? Yes, I took attendance, Jennifer. Thank you. You are present and accounted for. Thank you.
Thank you.
Thank you so much, Professor. Have a nice day.
You're welcome.
Thank you,
Bye,
Professor.
Leah.
Have a nice day.
You too. Bye-bye, Tuba.
Bye.
Jimmy,
Take
what?
care.
Bye, Clever. What did you say, Jimmy? If somebody wanted to do what?
Exchange brains for chapter 14.
Oh, yeah. You probably gotta wait. I don't know how far people are. Maybe you can check if someone else already started.